Welcome back to Investing Talk Podcast.
Today we're looking at Centrus Energy. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. To really understand Centrus, you've got to grasp this massive geopolitical shift happening, in global energy.
We're talking nuclear fuel supply.
Exactly. And Centrus is, positioned right in the middle of this pivot by the U.S. and Western Europe away from Russian sources.
That's the core idea, isn't it? Centrus Energy supplies low-enriched uranium, LEU fuel. That's the standard stuff for most reactors. But is there a specific situation that really counts here?
Precisely. Our sources are calling this a geopolitical moat. And honestly, it looks pretty solid right now. Centrus has this unique, really strategic position. They're the only U.S.-based supplier actually producing LEU fuel right now.
So when utilities over here or in Europe get nervous about supply security,
they basically have to turn to Centrus. It makes them the default strategic partner.
And what's interesting is how that unique spot impacts their revenue, their pricing.
Right. They aren't just selling a commodity where, the price is set by daily uranium rates. What they're selling is security.
They supply security premium, I think some documents called it.
That's the term, yes. And Western utilities seem demonstrably willing, to pay a bit more or accept maybe slightly lower yield just for that guarantee of non-Russian domestic supply.
So it buffers their revenue stream a bit.
A lot, actually, compared to companies just playing the commodity game.
And this stability, it flows right into their contracts, doesn't it? These aren't quick deals.
No, these are stable, predictable, multi-year contracts. We're talking about the world's leading utilities signing on for the long haul.
Okay, and besides the politics, there's a tech advantage too.
Yeah, a deep technology moat. Their advanced uranium enrichment. It's not just talk. It's mainly about their advanced centrifuge cascade design.
Which means?
Much higher efficiency. Lower energy use per SWU, that's separative work unit compared to older tech.
Making it hard for others to jump in.
Exactly. Huge barriers to entry. Copying that kind of protected, super efficient setup, it's incredibly expensive and takes ages just to get regulatory approval. Centrus is really cementing its lead here.
Okay, that market position sounds strong.
Yeah.
But does the money back it up? Investors need to see the results, right? How's the financial health look?
Well, the financials really seem to show that execution. We're seeing a dramatic acceleration in revenue growth. It's clearly driven by that increased strategic demand.
What of numbers?
The trailing 12-month revenue as of Q3 2025, it hit an impressive $436.9 million.
Okay, that's significant growth. And profitability, is it keeping up?
It is. Net income for that same period, $104.8 million. That confirms they're keeping those double-digit profit margins going.
Wow. And EPS?
Earnings per share stands at $6.16, trailing 12 months. And, analyst guidance, still very bullish. Mostly buy ratings maintained through 2026. They see this growth continuing.
Those margins are impressive. But, with that huge multi-billion-dollar expansion plan for Ohio, how sure are analysts they can keep those double-digit margins while spending so much on CapEx? That usually puts pressure on the bottom line, at least initially.
That's a fair point. And that's where the balance sheet strength is so important. Management's kept things really resilient financially.
I see.
Well, cash on hand is currently over $200 million. And total debt, it's tiny, just $47 million.
Okay, so a very low debt-to-equity ratio.
Yeah, around 0.25. Minimal leverage pressure there.
They've got the financial dry powder then.
Precisely. And look at their short-term liquidity. The current ratio is fantastic, like 4.5x.
That's very strong.
It shows really solid working capital management. It means they've got the financial muscle to fund this big expansion without, needing to dilute shareholders heavily or take on expensive debt that would risk those margins.
Right. So that financial readiness let them see some key opportunities recently. Let's talk momentum. Why is now such a critical time for investors looking at this? What were the big recent wins?
Things really picked up speed mid-year. Q2 results were solid, sure. $28.9 million net income, $154.5 million revenue. But the huge moment was July. The Department of Energy, the DOE, basically validated the whole future thesis.
You mean a HALEU contract? High-assay, low-enriched uranium.
Right.
What makes that so vital beyond the headline number, the $110 million?
Okay, so HALEU, that's the advanced fuel needed for the next generation of reactors. Specifically, things like small modular reactors, SMRs.
The future tech.
Exactly. The DOE exercised that $110 million extension on the HALEU production contract, taking it through June 2026. This wasn't just about immediate cash flow. It signaled that Centrus is locking itself in as the go-to supplier for nuclear energy's future, not just its present.
And the market reacted.
Oh yeah, that news alone sent the stock up over 9%.
And that extension, I guess, gave them the confidence to announce the big physical scale-up.
Correct. That led to the announcement of the multi-billion-dollar expansion in Ohio. It's a clear sign they're committing to meet that future demand head-on.
And the jobs aspect doesn't hurt politically either.
Definitely not. Projecting 1,000 construction jobs, 300 operational, it shows the project has commercial and political support.
So looking ahead now, what are the key things investors should have circled on their calendars, say, in the next 0 to 3 months?
Well, the most immediate is the Q3 2025 earnings release. That's November 5th. Given the momentum, especially that July contract news, expectations are pretty high. It's widely expected to be strong.
Any upside surprise could add more fuel.
Could definitely boost the rally, yeah.
What else is the market watching for in the near term?
Well, within this quarter, Q4 2025, we're expecting decisions on some potentially major U.S. government and European utility contracts. The market's watching closely for who wins those awards, especially with all the geopolitical stuff going on.
And any tech news.
Yeah, Centrus is expected to show off some next-gen LEU enrichment advances at an industry conference in December. That could potentially draw in new international interests, new partners.
Okay, let's shift gears slightly. Beyond the confirmed stuff, what about the buzz? The high-risk, high-reward catalysts floating around. What are the big rumors?
There's persistent chatter, unconfirmed, mind you, about a major strategic investment or maybe a joint venture tied to that Ohio expansion.
Any names mentioned?
Specifically, the rumor mill keeps bringing up a Korean consortium, names like Korea Hydro and Nuclear Power and Pyosco International, looking maybe to inject capital and secure future supply for themselves.
Interesting. A partnership like that would certainly help pay for the expansion.
Yeah.
But I bet there's also talk about more domestic funding.
Oh, absolutely. Speculation about more DOE money, maybe grants to speed up domestic HLEU production. That's always kind of humming in the background.
But we need the caveat here.
Absolutely have to stress this. These are rumors. Unsubstantiated. They move the stock sometimes, sure, but they carry serious headline risk. If this buzz fizzles out, you could see a sharp pullback, even if temporary.
Okay, let's look at the chart. The price action definitely reflects this whole explosive story. A massive 396% share price surge year to date. That's undeniable momentum.
It really speaks volumes, doesn't it, about how the market sees the strategic value and the growth pace. Technically, yeah, the bullish trend is clear. Consistent higher lows, higher highs.
What was the recent range?
Last 3 months, it's been trading pretty robustly, say between $250 and $390.
And if you're thinking about entry points, that $300 level seems like a key psychological and technical spot.
It really looks like the main technical anchor right now, and you see that confirmed by the moving averages. The stock's trading consistently above its 50-day, which is right around $300.84 currently.
And the 200-day?
Way lower, around $168.62. So, yeah, momentum is definitely strong.
But look, after a 396% run-up, a traditional valuation check, like looking at the PE multiple, probably flashes some warning signs, right? It must look stretched. How do we square that with this picture of massive future growth implied by the strategy and the spending?
That's the key question. And I think you reconcile it by looking at who else is buying right now.
Yeah.
We're seeing strong insider buying. Open market purchases by executives just in Q3 and Q4 of this year, that's a confidence signal.
And institutions.
Institutional data shows net accumulation.
Yeah.
Leading energy funds, hedge funds, they're adding positions.
So the sentiment is still bullish despite the run-up.
Firmly bullish.
Yeah.
Because they're not just buying the past performance. They're buying into the future earnings potential, the story driven by these big policy tailwinds.
Okay, we've hit the upside, the strategy. But we always need to look critically at the downsides. What are the main risks investors absolutely need to keep in mind here?
I'd say the first, and maybe biggest, is customer concentration. Centrus really relies on a fairly small number of very large utility clients, mostly those looking for that domestic supply security we talked about.
So losing even one would hurt.
Right. Even though the contracts are multi-year, if one major customer had, say, an unexpected reactor issue or faced a big regulatory change in their area, that would be a significant hit to revenue.
And tied right into their unique position is that policy and regulatory risk. They benefit hugely from U.S. government support, DOE contracts, but that's a double-edged sword.
Absolutely. They're exposed to potential shifts in government policy, changes affecting nuclear energy demand generally, or, crucially, changes in DOE funding priorities for things like LEU or SMRs.
A different administration could change things.
Exactly. If future governments pulled back on subsidies or commitments, Centrus's long-term order book could take a real knock.
And then there are the standard market risks for any energy producer.
Right. Commodity volatility, uranium prices swinging around that could still squeeze margins on new deals, even if they hedge part of it.
And geopolitical risks beyond just Russia.
Sure. As they aim to be a global supplier, they face risks in international supply chains, sanctions, shipping problems, things like that.
Okay, so let's pull it all together. We've got exceptional revenue growth, dominant market position, near-term catalysts, but also concentration and policy risks. What's the overall investment thesis for Centrus Energy right now?
Well, the consensus from the material we looked at is overwhelmingly bullish, maybe a 9 out of 10, something like that. Centrus just seems uniquely set up to ride these huge multi-year waves, global decarbonization, the urgent need for Western nuclear supply security.
So potentially attractive for different time horizons.
Yeah, it seems attractive for shorter-term traders looking to play those Q4 earnings and contract news, and definitely for long-term investors wanting exposure to the build-out of nuclear's future, especially through HLEU.
And that strong performance, the surging share price, it actually creates another interesting potential effect, doesn't it? Something beyond just the company's own fundamentals.
What are you thinking?
Well, if Centrus keeps growing this fast, its sheer size and liquidity increase. There might be a sort of speculative catalyst tied to passive investment flows that people should watch.
You're talking about index reclassification potential.
Exactly. Could Centrus's rapid growth actually force an early reclassification into a bigger, more widely tracked ETF or index product if its market cap hits certain thresholds quicker than expected?
It would force all those passive funds tracking those indexes to buy big chunks of shares, whether they want to or not.
Right. Non-discretionary buying. That kind of move could really amplify inflows and add another layer of upward pressure, sort of independent of the quarterly results themselves. That's definitely something for you to think about as the market heads towards year-end.